the military needs to pinpoint a location, you know how they do it? Sometimes they look, sometimes they use Google Maps. Sometimes they use something called triangulation. What's that?
When they hit off of three things, like
There you go.
pinpoint your location.
If I've got three different angles at something, here's person number one, here's person number two, here's person number three, you will note that there is a triangle right there. Okay? That does what? You notice if two people look, I can get it wrong. That's not the location, that's not the location, and that's not the location. It takes a third to do what?
To pinpoint it.
Figure out a precise location, and the more angles we add, the closer and closer and closer we can get. Alright? It's exactly what we're doing here. Alright? On Friday, we took a look at a problem. We talked about adjusting entries. We looked at it one way. What I did was I put an unadjusted trial balance up here. We went from the unadjusted trial balance, we went all the way through. We posted the entries, went to the ledger, got the new balance in the ledger, went over here, did an adjusted trial balance. That's one angle. Alright? We're going to take a different look at it today. Same entries. Okay, we still got 5 adjusting entries that we're worried about. That doesn't change. That's what's right there in the triangle. Nothing different. Okay? What are they? We got prepaid expenses. We got prepaid expenses. We got unearned revenue. We got accrued revenue. We got accrued expenses, and we have depreciation. Okay? Now, the way that we approached this thing the other day was we kind of eliminated. We said depreciation is very obvious. And when you get on the exam, depreciation is going to be very obvious. There's no curveball, there's no slider, there's no change-up coming there. Alright? You see it, you know it, you should know what to do. Grab the football, run to the end zone. Not hard. Alright? The tricks come on the other parts. Okay? And one of the easiest methods I do, or that I can think of, is to simply eliminate the other possibilities to find what you need to do. Alright? One reason that works is these are kind of hard to interpret. This is where accounting gets, this is difficult stuff. Alright? So, think about how you're going to approach this. Have a plan. The elimination stuff might not work for you. You might do better to pick out keywords. Just be careful. Make sure the keywords have to be there. Okay? So, we're going to take another look at this today. What I hope is that we can get this one done and come in here on Wednesday, run through a quick adjusting process, and I'm going to introduce Chapter 4, and then we'll get out of here. But I don't know if that's going to happen. So, on problem 3-5B, what you see is an unadjusted trial balance. Alright, so again, what you did on test number 1, this is where we left off. Right here, unadjusted trial. You did that for me. Alright? So you know how those numbers got there. We did the journal entries, we did the ledger, we took the balance in the ledger, came over here and made this trial balance. Right on? Good? Alright, that shouldn't be too weird of a concept. So, what we need to do is this. It says, Reese Financial Services, we repair appliances, owned and operated by Joni Reese, accounting clerk, prepared the unadjusted trial balance at July 31, 2014 as follows. So there we go. Over here on page 145, here's what we have to do. We have to record the adjusting entry. So let's make sure this makes sense to us. We're sitting here, we've got the unadjusted trial balance done. Now it's time to do what? Our accounting cycle says, now we do the adjustments. Okay, the 3 things we do are this. We gather the adjusting data, which they do for us at this level. Alright? Intermediate, advanced, you'll start to kind of look through and figure out how to gather adjusting data. They do that for us. Very nice. Okay? We have to do what? We have to take the adjustment data and do what? Arrange it over here into a journal entry. That's what we have to do. Alright? Then from those journal entries, we have to do what? Post to the ledger, just like we did last time. Then what? From the ledger, create an adjusted trial balance. Okay, and that's what we're trying to do here. So, on your exam for this part, I'm going to have an unadjusted trial balance. That's where we're going to start you. Okay? Then you'll have some adjusting data. You got to do the adjusting entries. Then from that, you have to create an adjusted trial balance. Okay? 1, 2, 3. That's it. So make sure you know how to do this. All right. Entry A. Entry A, we should all get. When we see entry A on the exam, we should all be very, very happy. It says what? Depreciation of building for the year is $6,400. That's what? Depreciation. Okay? That entry looks like what? We debit. I know the answer. We debit what?
Depreciation.
Good. Depreciation expense. We'll do this on July 31st, 2014. So July 31, 2014. We're going to debit depreciation expense. Our amount is $6,400. So $6,400. We'll make a little debit column there and a little credit column there. What's my credit? What kind of asset? You're right, generally. What? Contra asset, specifically what contra asset? There you go. Accumulated depreciation. And this is for building. And that is $6,400. There's the entry. Okay? All you have to do is remember the accounts. Alright, now here's one thing to be careful about. The accounts may not be listed over here on the unadjusted trial balance. So don't get used to looking over here at the unadjusted trial balance for the names of the accounts. Okay? In this case, accumulated depreciation is there. But what if this is the first year we depreciate this thing? There's no prior accumulated depreciation. Then what? It's not going to be there. Okay? So make sure that you spend some time here and make sure you have the names of those accounts because you may not see them anywhere. Alright. We good there? Alright. If I don't do this, what's the impact? This debit to an expense is going to flow through to what? Eventually, it's going to hit the income statement. That's where expenses go. Alright? So if I don't record this debit to an expense increases in expense, then what? Expenses will be understated. If expenses are understated, income will be overstated. Alright? If this credit to a contra asset does not flow through to the balance sheet, if I don't do this, if I omit the entry, then what? Assets will be overstated. Good. Alright, part B. Depreciation on equipment. 7/31/14. What's the entry look like? Alright, good. Depreciation. Expense is debited. Here we're going to credit accumulated depreciation, and is it equipment? Okay, equipment. And my amount is $2,800. All right. Same as entry A. If I don't do this, expenses will be understated, income will be overstated, assets will be overstated. Okay? All right, questions on depreciation. Is there anything in there that looks funny to you? Something doesn't feel right? Counts feel weird? Yes, sir.
When you put that into the ledger, is that two different accounts for accumulated depreciation
Yeah.
building?
Good question, yeah.
Okay.
What he's asking is this. When I get ready to post this to a ledger, I'm sorry, I should have addressed, thank you for asking that question. When I get ready to post this, what you will see in the ledger is this. You have an accumulated depreciation account for the building and an accumulated depreciation account for equipment. Okay? The reason we need this is that you have to remember that assets are placed in the books at historical cost. Okay? So I always need to have a sense of how I value these assets on the books. All right? If I've got 2 buildings, guess what? There's an accumulated depreciation building number 1 and an accumulated depreciation on building number 2. For as many assets as I have, I'm going to have an accumulated depreciation account. Okay? Now, in a presentation to investors, you do what? You summarize all these accumulated depreciations and you throw it out. So, but when you get down to brass tacks and looking at somebody's book, you have an accumulated depreciation account for every asset.
Okay, so even if it were 2 different buildings, it'd be building number 1.
That's right.
Okay.
Yep.
Got it.
All right. Good question. Anything else? Okay. All right. Part C. Moving right through here. Accrued salaries and wages at July 31, $900. Explain that one to me. Accrued. What's that mean? Something accrues at what? At what? I think I heard it. At what? We don't know?
Like cash is yet to be paid.
Yeah, right track. Cash is yet to be paid, which means what? We haven't paid the employees yet, but they have what? They have done what they do to get paid. All right? So, when you see accrue, it just means it builds up. All right? In the accounting world, it means the cash Ben was talking about has not exchanged hands yet. All right? So, when I see accrued, I need to know that something has built up and money has not what? Money has not exchanged. All right? Remember the first thing we talked about in here was when I'm dealing with revenue and expense, I'm adjusting the income statement is what I'm doing. It has everything to do with revenue and expense. Okay? I record expenses when? I have to match them with the revenue. Okay? I record revenue when? When I collect the cash? No, when the service is performed. Okay? So, money has not exchanged hands when you hear accrue. And what? Something has built up. Either revenue or expense. Either one can build up. Alright? So in this case, what's salary and wages? That's an expense to us. That's something we have to pay. Alright? So an expense has built up. So, here's how we think through this. You see the word accrued sitting there, it's a dead giveaway. Salary and wages is an expense, so I have what? I have an accrued expense. Now, I know a little something about accrued expenses. I know if I can recognize an accrued expense, I always debit what? I always debit an expense. In this case, it's going to be salaries and wages expense. And where do you get that? If you look on page 145, it says journalize the adjusting entries. This is instruction number 1. Using the following additional accounts, and there is salary and wages payable, rent revenue, insurance expense, depreciation expense, equipment, and supplies expense. And this one is over on only unadjusted trial balance. It says salary and wages expense. Okay, so that's where I'm pulling that from. Now, what's the offset? Well, let me get my amount here. 900. Okay, so if I ask you to look at this, if I say, come audit my accounting books for my business, and here's this sitting here, salary and wages expense, you know what? That's what? I'm recognizing an expense. All right, here's the entry on the last day of the month, and I'm what? I'm recognizing an expense. Now I need the other half to explain the full story, right? Okay, what's the other half?
Liability.
All right, I'm going to credit a liability. In this case, salary and wages payable. $900. All right? So if I look at that entry, I need to be able to tell what it is. Here I am recognizing an expense, debit. Here I am increasing a liability with a credit. I need to be able to look at that and know what? That's an accrual. Those of you who go and do accounting professionally and audit and all that good stuff, that's where you need to be. You need to be able to look at this, look at what's being debited, look at what's being credited, and have a general idea of what's going on. If you look at somebody's books and you see this entry, okay, and you say, what's that entry? And they say, oh, I'm booking revenue. No, you're not. What are you doing? This has nothing to do with revenue, and you'll see that. Okay? People who think they know what they're doing will put stuff in the accounting books that are completely wrong. Okay? So, we've got to be able to interpret how debits and credits impact financial statements. If I don't do this, if I don't debit this expense, then what? My income statement's going to be messed up. How? I'm not going to recognize enough expense. So expenses are going to be understated. If I don't do this, liabilities will be understated. Right? Okay, so what is that? These two up here, you remember we had the 5, right? Okay, depreciation, that's what? Out of the 5, that's called an accrued expense. How do you recognize it? You recognize it by what's debited and credited. Alright, we debit an expense, we credit a liability. That is, by definition, an accrued expense. Okay? Alright, questions on that one? We okay? Why would this situation pop up? This is a very, if you're going into accounting, this is one you're going to see all the time. Why does that pop up?
Salaries paid bi-weekly.
All right, there you go. All right. The end of the month comes in what? In between the paydays. Okay, so I got to do what? I got to recognize the expense in the proper month. That's why I do this entry. All right. When payday comes around, I'm going to do what? That's when the actual cash is going to get released, and I'm going to reverse this. I'm going to debit this and credit my cash because I'm getting rid of cash. Okay. You don't have to go quite that far yet, but that's the full story. Okay, so we're happy here. We got it? When we come in here on Wednesday, we're going to be just rattling these things off, right? And most of my time is going to be on chapter 4, right? Yeah? Maybe? Okay, alright. Alright, letter D. Unexpired insurance. 7/31/14. When you recognize, when you see the word insurance, when you see an asset listed in there like that, okay, you can eliminate a couple of options right off the bat. Okay, so here's what it says. Unexpired insurance at July 31 was $1,500. So you always have to be careful when you have these types of entries, and let me tell you why. What entry are we looking at here? What about the words here directs you where to go? Well, when you get on the exam and you read unexpired insurance at July 31, I don't want you to just skip that one and say, it's just 3 points, I'll take a hit. I want you to know what to do. What about that tells you where to go? Alright, unexpired what?
Insurance.
Insurance. Alright, so I can look over here and I see one account that has to do with insurance, and it's prepaid insurance. Prepaid insurance is what? What does that mean? Alright, it's an asset, and it means what? I paid early for 6 months, a year, whatever, of insurance coverage. And that goes down as an asset to me. Alright, so here's what it says. And let's start on the unadjusted trial balance. These numbers come from the ledger, right? Okay, so here's what the ledger looks like for prepaid insurance. It looks like this. It says there is a debit balance of $6,000. Okay, so the accounting 201 student who did this did all the journal entries, got this balance in the ledger, and put it in that unadjusted trial balance, just like you did. This information says what? It's a comparison. This says what? Unexpired insurance at July 31 is $1,500. So somebody's lying. Not intentionally, it's just that time went by, right? Okay? Is this the balance? That's the question. It's not, because that tells me what? I have to go with this. This tells me that the balance is $1,500. This says there's $6,000 worth of unexpired insurance. This tells me what? That tells me there should be $1,500. Okay? So the question is this. If my books say that's the balance, how do I get from here to here? I got to do what? Yeah, the way that I decrease this $6,000 debit is to plug in some credit over here. All right? It's a math equation. All right? Here's my number according to the general ledger. Here's how much was used. here's how much is left. Okay, so 6,000 minus what gives me 1,500? All right, I got to plug in for 4,500. All right, 4,500 is my amount there. What do I debit? Insurance expense. Okay, here I go debiting an expense again. All right, debit insurance expense. Credit what? Perfect. Prepaid insurance, which is an asset. Okay, credit prepaid insurance. 4,500. All right. So what do I have? If I look at this, if I give you this on an exam and I say, tell me, don't do the journal entry. Tell me what that is. Out of the 5 options, you got a 20% chance of getting it. You can eliminate depreciation because depreciation is not in here. So you got a 25% chance of getting it right. What is it? Well, I'm debiting an expense. So I can eliminate accrued revenue and unearned revenue. Those are out. Okay, so now I got a 50% chance. And I'm crediting in asset. It tells me what? It only leaves one option, right? What is it? It's a prepaid expense. All right, so there's my entry there. You have to be careful on this one. Here's an alternative presentation. All right, notice what this says. This says unexpired insurance at July 31 is $1,500. All right, so they're giving you the balance. Tell me if this is the exact same way of saying what's going on. Expired insurance during the year was 4,500. That's the same thing? It's the exact same thing. Okay? So you have to be careful in the wording of how, especially on prepaid expenses. Okay? It can be a mess. Okay? So you have to ask yourself the question, are they giving me this? Remember, it's 3 parts. All right? This comes from where? Unadjusted trial balance. Exactly right. Okay? I will never have to guess that number. That's going to be given. Okay? I'm going to be given either this one or this one. I have to be able to read the scenario and interpret which one they are giving me. Okay? If it says unexpired, they're giving me what? They're giving me this. Okay? If it says unexpired, I got to do what? I got to do a little math to figure out